Hello, everybody, and this is Antonio Lugo, and my guest speaker today is Jeff Badu. And thank you for joining us on our topic on tax reform. Again, my name is Antonio Lugo. I'm a college professor at the City Colleges of Chicago, and I'm also the president and financial advisor of Smart Wealth Strategies. And I'm hosting today's presentation, and I brought our guest, Jeff Badu. He's a CPA and president of Badu Tax Services. He's based here in Chicago, Illinois, and he's a host of our weekly radio show on WGHC 98.3 FM. He's an invited speaker on many tax matters related to taxes as we speak. So our topic today is really the shift in the landscape as it relates to taxes. Many of you have heard there's a major change on the tax law that's affecting most companies and most individuals. And we want to hear about what's the latest. So I prepared an agenda that I like this. But before we do, I want to be upfront and with all transparency and let everybody know we are not employed, not myself nor my guest speaker with the IRS, Social Security Administration, or any other government agency. We will share some examples and some information, but based on some particular facts, but everything is strictly educational. Okay, so our agenda today, our particular goals are to highlight what's new with the new tax law and how it affects you and all of us. Second goal is what should you look for as to improve your tax liability for 2018 and hopefully beyond. And finally, what should you be looking for from your professional tax advisor? Now, this call should just go for at least 2-3 minutes, so we ask that you bear with us, but these are the focus of our conversation today. Now, without further ado, please help me and welcome Mr. Jeff Badu.
Hey, Tony, Jeff. How's it going?
All right, great. Thank you for joining us today, Jeff.
Yes, sir, not a problem.
So I'm going to get right into it. I know everyone's busy, so I've got the questions that I'm going to ask. That we only have about 4 to 5 questions. And the first question that everybody wants to know is, what are some of the biggest changes that most people should be aware of?
Yeah, so I'm glad you asked, Tony. So some of the biggest changes, pretty much the tax brackets have changed a little bit, with 37% being the highest tax rate now. And we still have 7 brackets, and pretty much what happened is that the brackets were lowered by, let's say, about 2 to 3%, per bracket, essentially. And then another thing that happened is that they doubled the standard deduction. So everyone gets a freebie. We used to get about $6,300 if you're single. Now you get $12,000 or so if you're single, and then if you're married, you get $24,000. And so that's pretty big as far as tax reform is concerned. And so as the trade-off is, unfortunately, they've taken away exemptions. This is a very, very big topic. And an exemption is basically a freebie that they throw to you of about $4,000 per person that you claim on your tax return. So for you, your spouse, your dependents, you get an exemption of about $4,000 per person. And that's essentially, that's an offset to your gross income, which translates, let's say, for example, you are in a 25% tax bracket, that would be about $1,000 tax refund or a net tax effect. So those are the 2 changes as far as the exemptions are concerned. So other things are the medical expenses. You now need to meet a 7.5% threshold. It used to be 10% if you're under the age of 65. The deduction for state and local income taxes, this is big, huge. State and local income and property taxes are now limited to $10,000. So if you own a big home, it might not be beneficial anymore as far as your taxes are concerned, because you might not be able to write off the high property taxes. And then other things that happen with the bill is, these are other things. So they made some changes to what's known as the alternative minimum tax, which we won't talk about too much because it doesn't really apply to a lot of people. The child tax credit has been doubled. It's been increased from $1,000 to $2,000, and then there's now a non-refundable credit of $500 available to qualifying dependents that are not children or qualifying children. So even though they've taken away the exemptions, they've at least doubled the standard deduction. And and they've at least doubled the child tax credit as well. So they've taken away some things, but they've added other things. And then, and other things to get into. I mean, we've talked about the exemptions more on the individual side. Really, the last thing with the individuals is that the health insurance individual mandate, the penalty. So if you don't have health insurance after December 31st, 2018, you no longer face that penalty. As far as businesses, pretty much there's been the corporate tax rate. This is the biggest part of businesses. The corporate tax rate has been cut to 21%. And then there's some other benefits. For example, there's now a 20% deduction for small businesses such as S corporations.
Right. Well, I know there's a lot of moving parts to this, and I want to make sure I tell the folks, as many folks probably taking many notes, we will have a downloadable document. So a lot of this information Jeff is sharing will be documented for everybody. So I didn't want anybody to think they'd miss a point or two. So, but thank you for bringing those points up. Let's move forward to, how does this new bill affect most millennials?
Yeah, so I would say with most millennials, we like to get involved with the gig economy, they call it. Uber, Lyft, Airbnb, all types of crazy gigs that we like to get involved with. So I believe for people in the gig economy, mainly millennials, we are going to be benefited, because now we get, for example, we get a new 20% deduction on our net income or our net business income. So as an Uber driver, you're actually a business owner, and that you own a business, and now this 20% deduction is going to benefit you. Now, another thing is that I believe that some millennials, or most millennials, with this whole, there's an issue with millennials not buying homes. So when you limit the state and local property tax deduction, I believe that's going to have some sort of impact on millennials' ability to buy properties if they won't be able to deduct it. Now, here's a counter to that, in that you turn your personal property into an investment property. So maybe you Airbnb some of your rooms, or maybe you got an FHA loan, Federal Housing Authority loan, and you got a 1 to 4 unit for a flat or something. So you got, let's say, a 4 flat, a building basically with four units in it. So maybe you live in one and you rent out the others, so you won't be that much impacted on the limitation of the state and local property taxes. So overall, I think millennials, it's an opportunity to be creative. It's an opportunity to benefit, especially if you own a business. I believe more millennials will become business owners, because this Tax Cuts and Jobs Act was really meant for people who create jobs. So I believe that it's an opportunity for millennials like myself to go out and start a business and just thrive and get a lot of different benefits. And I believe that more millennials will be starting businesses in the future.
Absolutely. And I would like to jump on that comment about establishing businesses. Some folks have even set up LLCs for their properties, their homes.
Oh yeah, absolutely.
So that's another way to take advantage of the 20% tax, what they call when they transfer that withholding tax.
Yeah, I would say it's more of a 20%, let's just call it a freebie, 20% deduction. Let's just call it a 20% standard deduction now for business, for small business.
Yeah, so I found that interesting. So let's go to the third question. What changes should I expect in my paycheck? And that should affect everybody in the next month, I think.
Yeah, so according to the IRS, starting in February, your paychecks will be impacted. So I'll share my opinion, then I'll share IRS's opinion. So in my opinion, when you're taking away exemptions, you're ultimately, so let's say a W-4 form, which is the form everyone fills out when they have a job, the first day of work or the second day of work. They give you this form and say, how many exemptions do you want to claim? And so in the past, you would be able to claim, let's say it was you and you were married and you had 2 kids. Well, that's 4 exemptions for federal. Well, they just got rid of exemptions. So technically, you're supposed to put in 0 in those boxes. So what happens with an exemption ultimately, the more exemptions you have, the higher your paychecks are going to be. So when they're taking away exemptions, then your paycheck should be smaller. However, according to the IRS, your paychecks are actually going to be bigger because they are factoring in the fact that the standard deduction being doubled, they're going to factor that into your W-4 or into your paychecks. So there's a lot of mixed opinions regarding this. In my opinion, paychecks should be getting smaller, and then you would ultimately get a bigger tax refund. But the IRS is ultimately the one that comes out with the tables. And so according to them, you will see an increased paycheck. So in other words, I think it would be safe to say that your paychecks are going to increase if you have the backing of the IRS.
Thank you. Thank you. Number 4. Now, what are the opportunities that I should consider to possibly improve my tax situation for this year?
Yeah, so this is a very good question, and I think this is where creativity needs to come in handy. So first and foremost, I believe that you should hire a tax advisor, a good one at least, one who is qualified. And I'll share later what it means to be a qualified tax advisor. But ultimately, this is an opportunity, this is an era for you to become even more creative. So now we have jobs like Uber, Lyft, we have Airbnb, we have car rental sites, different things out there for you to be creative. So what you should do, you absolutely must do this, is I believe you should own a business. You should start a business or you should start owning some investment properties and be able to claim some deductions on your tax return as well as build long-term wealth. And so overall, I believe you should own a business because businesses are the biggest winners in this whole tax reform. You get the new 20% deduction. You get to accelerate what's known as depreciation, or you get to write off a lot of things much more quickly. And then, so I would say that is one thing to consider. Now, if you're not if you don't have any business aspirations, perhaps maybe you switch your W-2, you contact your employer and say, hey, well, I see this new tax reform is going to impact me. I want to switch from a W-2 to a 1099. So now you're not necessarily starting a business, although technically a 1099 is a business owner. So all business owners, so Uber, Lyft, those folks have a 1099 that gets issued to them at the end of the year. So instead of you at your job getting a W-2, you now have a 1099 and you're able to dictate when you get paid based. So they pay, let's say they do pay you every 2 weeks. You have an entity or you have a bank account that the money goes into. You determine how much they withhold, or you determine how much you withhold as the 1099 self-employed individual. So even if you don't have aspirations to start Amazon or to start Apple, even let's say you work at one of these companies and you have the opportunity to switch from a W-2 to a 1099, that can lead to some massive savings, especially when you have this new 20% deduction that's afforded to 1099 folks and not to W-2s. One thing to keep in mind is that they've basically gotten rid of all deductions or all benefits for W-2s. Not all of them, but they've gotten rid of unreimbursed employee expenses, moving expenses, just a bunch of different things that they've gotten rid of that you can still write off if you have a 1099 or you're a business owner.
Great. Well, those are some great ideas. In fact, I have to say, I do like an advisor like yourself that's proactive, because I always ask my clients as their financial advisor, what has your tax preparer offered you in terms of any tax savings? And oftentimes there aren't any ideas that's often shared. So what you shared is very important. I appreciate that. My next question too is, what should I look for from a tax professional?
Yeah, so I'm glad you brought this up. And to tie into your point, I believe a tax professional should be proactive. Should be one that's looking out for your back. It should be somebody who's looking at your tax return and not just punching the numbers, but they're actually talking to you about these numbers and they're helping your tax situation. So if you meet with your tax professional only once a year, you have the wrong tax professional. You ultimately should be meeting with them frequently. At a minimum, I would say at a bare minimum, 3 times a year, even 4 times a year. Let's go above and beyond. You should be meeting with them 4 times a year or so, or have some sort of contact with them, because when it comes to this tax reform stuff, you know, it's very important that we start planning. Our retirements are going to be affected. Our paychecks are going to be affected. So we should not be sitting down with our tax professionals just once a year and watch them plug things into a software. I think we should be sitting down, or our tax professionals should be sitting down with us, actually sit down and look at the tax return, go through line by line everything, and say, this is how we improve upon that situation.
Great, great. Well, thank you for sharing. Those are great points. So, in conclusion, I want to make sure I emphasize that everybody here has their own personal tax situation, and it varies greatly, like anybody else should expect. So, understanding that this is just some general education, some new ideas, some new information, and I think I would recommend you definitely sit with your advisor on reviewing that situation. Now, I will say that a lot of this information that was shared this call could have kept going another hour, but we shared some quick highlights on a complimentary compliance approved brief article that we've created called "What's the New Tax Bill Mean to You?" So if you're interested in that, we'll share that on our site. Other than that, I want to thank our guest, Jeff Badu, for joining us. Jeff, thank you again for coming here.
Yes, sir. Thank you, Tony, and thank you to everyone that tuned in.
And our favorite motto is, think about tomorrow, today. Enjoy.